All right, welcome back. Let's do some calls. Gilead got upgraded today to a buy. 120 is the price target at Deutsche, which also downgrades Merck to hold from buy, price target to 105. You have both of these stocks, so you're the perfect person to talk about this. What about it?
Well, thank you. We've owned Gilead.
Do you not want to talk about it?
Of course I do. We've owned Gilead for 10 years. It's both tactical and value. It's value because of the great cash flow and the balance sheet and the dividend growth. But now from the tactical perspective, it's got a great pipeline. That's where healthcare investors want to be. And that's why we've doubled our position over the last year in our tactical side while maintaining and valuing dividend growth. On the Merck side, we own it much lower. Own it for a long time. We only own it in our dividend growth portfolio for very specific reasons.
It's a new 52-week low today.
I know, but from a taxable perspective, we run taxably efficient portfolios where we've owned that stock for at least 8 years. We own it at much lower levels. We think that, again, from longer-term perspective and fundamentals, we want to own it because of the dividend.
Surat, you have Merck too.
Yeah, and I share the same thing. We've owned it for so many years that our basis is low, but that's not the only reason I own it. It's down 18% for the year. It's a value contrarian play like Bristol is and Glaxo is. So if you're going to play the deep value contrarian play in pharma, I think this is one of the best.
Let me just say something real quick. I mean, both you guys.
Yeah.
Just because you've made a lot of money in the name, which you're insinuating by suggesting, well, we owned it at much lower from much lower prices, doesn't mean that you're going to make the same rate of return from here forward.
I don't disagree with you, but what I'm saying is I still think.
I know you've owned it from much lower levels.
So let me address that. Insinuated, not insinuated. We're a published analyst, so we actually publish our
okay.
Stuff.
So you made a lot of money because you owned it a lot lower.
Record,
I get it. I hear you. But
if you think about it,
what's the helpful piece of advice out of that?
Here's the helpful piece of advice. We own it because it's a dividend growth name. We own it because it's more of a value name. We own it because the stock has not cut a dividend in 25 years. We own it because the free cash flow yields above the dividend yield. We own it because their earnings are still positive. Yes, from a tactical perspective, we don't buy and trade stocks every other day. We buy and trade stocks and own stocks as an investor with respect to the specific strategies that we run.
Now, that's the kind of answer that I think is what people were looking for.
Well, thank you, Scott, for allowing me to do that.
Thank you, Brian.
If I could, small on Merck. It's a name that I have owned in prior years. Don't own it anymore. I think what is good about the Deutsche Bank downgrade is, here you go. The analyst community is finally saying, okay, we're going to begin to acknowledge the price deterioration. The 12-month price target on this stock is 35% higher.
Right.
No one is a sell. 67% of the analysts have a buy.
Don't you own this name too?
Merck?
No?
Yeah, but you know what, though? On the analyst price targets, analysts are really good at a lot of things. Some of them are good at price targets. Some are good at modeling. Some are good at fundamentals. I would never, and I've never in my collective career, bought or sold a stock based on an analyst price target.
Agreed, but it's a reflection of sentiment.
Correct.
It's a great reflection of sentiment.
You can.
All right.
Does Merck look like a momentum name to you? No.
Okay. I thought you owned it.
Does. No.
Gilead
well, Josh
does.
has highlighted Gilead as last week.
Great stock.
Looking for a breakout.
So give me a 10-year chart. Let me cook for like 2 seconds, and we can get out to a break.
Go ahead.
Look at the 10-year chart on Gilead. So I wouldn't sit through 10 years of this because it's like a smile, and you're riding. That's not 10 years. There we go. Thank you so much, guys. Look, I mean, so the smile is going to have a happy ending when it gets back to the upper right corner of the smiler's mouth, but like. Let it break out. So I don't know anything about it. Honestly, nothing. It broke out last week. So I'm like, hey, if you haven't looked at Gilead in a long time, and I haven't traded it in like 15 years, now might be a good time to find out why it's doing what it's doing. So it's not one approach is better than another. This is a different approach where you say, I don't want to sit through a consolidation period that lasts 10 years while a pharmaceutical company tries to do like research. I'll just buy when that's over. And I think that's why it's on the best stocks in the market list and why now it's momentum while Merck is just in a different phase of its, but it doesn't mean one is better than the other long term. Short term is a huge difference.
All right, good stuff.